In this video, I'm going to be talking about multi-time frame analysis and how you can apply it to your day trades. Traders from around the world, thanks so much for tuning into this video. It's your Mark Ruffalo of the Moving Average, and what I'm doing right now is looking at Tesla. This, of course, is on the daily chart. Why should you look at the daily chart when you're trying to day trade? Of course, a day trade being something that's lasting minutes, maybe hours, but in general, you were getting in and getting out, creating cash flow, paying bills, stacking chips, and being amazing. On Tesla today, here was my analysis on the day trade. This is the daily chart looking at this big bearish candle, and noticing that we were gapping down this morning. Why was that important? Well, with these two bear candles, my assumption was the short traders would be buying to cover to lock in their gains eventually. Secondly, I looked at two big moving averages, the 100 simple, which is here at the purple line, 967.98 approximately. And also you had exponential moving averages, which was the 50 EMA, and the 50 EMA was at 976. When I took my trades, I made sure that I outlined and drew a line on both of those price points so that I would know on an intraday level where they were at and how I should be approaching that trade. Then I popped into my favorite time frame to day trade, which is a 3-minute chart. And the trades that I played went as follows. Here's your 3-minute bearish high wave candle. I played a break above that and sold here, taking a quick little gain. Now, why did I sell here on this pop? Well, honestly, because it was a new high. I was profitable, made some cash flowing opportunities in 6 to 7 minutes. Why not? And then stock came down. Again, notice this purple line. This is the 50 EMA on a daily. This is the 100 on the daily. So as long as those two price points are being supported, buyers are coming in, and they are really attacking that price, I am staying with a bullish perspective. Thirdly, you'll notice on the intraday time frames, we're actually still above the 10, the 20, and the 50. So those moving averages are still acting as a support. So with this bullish candle and this bullish candle, both of those came in. Once they came in, I bought a retest of this ginormous bullish candle at approximately the halfway point, which was also the previous high right there of the pre-market level. Bought that dip and then sold that rip as well. The only unfortunate part is I'm kind of kicking myself. I didn't get back into Tesla for a third time, playing the exact same price twice. Should have done that, but I did not. This right here is a copy of the trades that I took this morning. So these were the two trades on Tesla. The first trade was 400 shares, as you can see, entering here, selling on that pop. And then the second trade was only 200 shares because, again, I had already locked in a gain, and I cannot go realized green to red. I need to make sure I keep my profits, keep my cash flow, stack those chips, sell those rips. Here is the P&L for the day. Nice, comfortable R and some change. And my goal here is to protect that, to not get bored, and to trade like a champion. I hope this was helpful and beneficial. If you have any other questions, make sure to answer or leave them in the comment section below. My job, if I have one, is to pour in light, love, and happiness into the world and ensure that you too can do this every single day, week, month, year, or quarter. Create cash flow from the markets. You absolutely rock. Thanks so much for tuning in. And until next time, love life, live life, and trade it. Bye.